Ladies and gentlemen, how are we doing? Matthews here from M&L FOREX Traders. I hope you're doing great. All right. So, as you've seen from the title, today we're going to be looking at the most important candlestick patterns that you are supposed to familiarize yourself with. All right. These are extremely important. And candlestick patterns are a graphical representation of what is happening on the price chart, right? So it's extremely important for you to understand the language so that you're able to implement this in your trading. It's extremely important. All right, so let's go without wasting much of your time. All right, so a candlestick pattern, a candlestick chart, what does it consist of? All right, so you can see right here that this is what we call a candlestick cheat pattern. A candlestick, when you look at it, it tells you few things. Number one, it tells you the low and the high of a particular candle, and it also tells you the wick and the body of a particular candle, right? So a candlestick pattern can be either bullish or bearish, so depending on what trend the market is in, right? So right here, you can clearly see that this bullish candle, remember that it opened low, then went to the upside, created a high, and there was another low, then it closed higher, right? So it opened low, then sellers came and pushed the price lower, then buyers came in and pushed the price to the higher side right here. Then the selling pressure pushed price a little bit lower. However, the buyers were in control, therefore this price closed higher. So always a bullish candle is always going to close higher than it opened. I hope that's not confusing. All right, so you can see this is the body and this is the wick. The wick is also called a shadow. Extremely important, right? So the bearish is the opposite of the bullish one. Right here you can see that this opened higher, price the bulls tried to push price higher. However, the bears came in and pushed the price lower. The bulls tried to push price higher, however it had to close lower than it opened. Therefore, all bearish candles open high and close low. I hope that's not confusing. Let's move on. So there are two major categories of candlestick patterns. So we have what we call bullish reversal patterns and bearish reversal patterns. So let's start with the bullish reversal pattern. So in this particular case, I'm not going to show you some chart examples of the bullish one. However, I'm going to show you the bearish examples. Right? So let's just go. So right here, what you're seeing is what we call a hammer. Okay? Or a bullish pin bar. What does it tell you? A bullish pin bar or a hammer is a bullish reversal pattern that is formed after price was either in a short-term or long-term downtrend. This, however, this is how you can recognize it, right? So it has little to no shadow, meaning it has little to no upper body right here. And then the price closes at least at the top 1/4 of the range. So you can see that the body is very small, and then the lower shadow is about 2 to 3 times the length of the body. As you can see that this lower shadow is about 2 to 3 times the length of this shadow right here. And also, what does this hammer tell us? When you see a hammer, what does it tell us? When the market opens, the sellers took control of the market and pushed the price higher, and the price pushed lower, right? So when the market opens, remember, where does the bullish candle open? When the market opens, the sellers took control and pushed the price lower. At the selling climax, huge buying pressure stepped in and pushed price higher. All right, so the buying momentum was so strong that the price closed above the opening price. In short, a hammer is a bullish reversal pattern, All right, it's a bullish reversal pattern that shows rejection of lower prices. Okay, not just because you see a hammer doesn't mean that the market will reverse immediately. So you need confluence, you need structure, you have to have a setup for you to use this as confluence, as a selling signal. You have to have this happening at a strong bullish, at a strong demand zone. All right, you have to have this happening at the demand zone. Then that will give you confluence of that particular trade most likely to work, right? So that's when you can actually use this as an entry signal. So let's go to the other candle. The other candle is what we call the morning star. You can clearly see that this candle has got three it's made up of three candles, right? You have got the bearish candle, got the indecision candle, what you call the doji candle, and you got this big bullish candle right here. So you can clearly see that we have a three sets of candles right there. So what does it tell us? So a morning star is a bullish reversal pattern that is formed after price was either in a short-term or long-term downtrend. This is how you can recognize it. So the first candle has a bearish close. The second candle has a small range, which means doji or indecision. And the third candle closes aggressively higher than the first candle. You can see that it closes higher than more than 50% of what? Of the first candle. So make sure that this candle closes higher than this, right? And what does it mean when you see a morning star? As well, it's a bullish reversal pattern. So on the first candle, the sellers were in control, and as price closes lower. On the second candle, there's an indecision in the market as both buyers and sellers are in equilibrium. Right? So on the third candle, the buyers won the battle and price closed higher. In short, the morning star tells you that the sellers are in control and the buyers are exhausted at a particular time. All right, just like the first one, you will have to make sure that you have this on a nice bullish reversal pattern. On a nice demand zone. You can use this as confluence to take a trade because it shows that it's now telling you that there's now shift of strength from sellers to buyers. So you don't just take a trade because you see a morning star. You take a trade when this is happening at your areas of significance. All right. So the other important candle is what you call the bullish engulfing pattern. So a bullish engulfing pattern, it has two candles as you've seen right here. To engulf, it's actually to swallow. So a bullish engulfing pattern is a bullish reversal pattern that is formed after price was either in a short-term or long-term downtrend. And this is how you can recognize it. So the first candle has a bearish close, and the body of the second candle completely covers the first candle without taking into consideration the shadow. The second candle closes bullishly, and this is how you recognize the bullish reversal. The bullish engulfing pattern. On the first candle, the sellers are in control, and as they've closed lower than for the period. And on the second candle, strong bullish pressure stepped in and closed above the previous candle high, which tells you that the buyers have won the battle for now. In essence, bullish engulfing pattern tells you that the buyers have overwhelmed the sellers and are now in control. Just like the hammer, a bullish engulfing pattern when you see this, doesn't mean that the price is automatically going to turn. It just tells you that, okay, there's shift of market structure right here, and this is your confirmation. However, like I always say, there is no way to know what's going to happen on a trade by trade basis. However, this is just added confluence. All right, so this is extremely important. All right, so those were the bullish reversal patterns. Now let's look at the bearish reversal patterns. Like, these are the most important patterns that you have to look for. Every time you're trying to actually execute a trade, make sure that you have those as added confluence, because that's how you become consistent in this market. Make sure that you understand these things. So let's look at these good bearish reversal patterns right here. So the first one is just the opposite. Everything you're seeing here is the opposite of the ones you've looked at, right? However, it's just in reverse. So a shooting star is also called what? A bearish pin bar. This is what you look for as confirmation for a sell. Make sure you have this before entering a trade. Personally, this is one of the best confirmation I look for whenever I'm placing a trade. So it's extremely important that you actually do that. So it's very important. All right. So the other thing, let me just show you an example. Actually, a chart example of this particular one right here. You can see right here that we had a nice rejection of this level right here. You can clearly see that the market rejected this level right here with a nice pin bar. All right, that's confirmation for your sell right there. Then the other candle is what we call the evening star, which is the opposite of the morning star. It's exactly the same thing. And then just show you the example. Right here, you can clearly see that we have three candles. We've got this candle, and the other candle there, which completely covers the other candle right here. You can see after that happened, what happened to the price? Price dropped. But however, this doesn't mean that whenever you see this, price is going to do what? It's going to drop. Okay, just like I've said, they're just telling you that there's a higher chance of that happening, but it doesn't mean that it's automatically going to happen. The other one is the bearish engulfing pattern. All right, it's the exact same thing, just the opposite. So I don't have to read through. If you need this, you can actually. I'll leave the links. The links are down in the description. I can actually send you this if you need it. So feel free to do that. All right. So this is as well. This is a nice one of the best confirmation entries that I actually look for. These are one of the things that I actually look for every time I'm trying to enter into a particular trade. So extremely important. All right. So doesn't mean just because you see this happening doesn't mean that you should automatically enter into that particular trade. So you can see that we had a nice bullish engulfing pattern, right? Bearish engulfing pattern right here at supply zone, right? And then what happens? Price drop. Okay. This is what I'm talking about. This is what we call entries. All right. So what's the take home message? Number one, never trade candlesticks in isolation. No matter how confident you are, no matter how good you are at reading charts, at reading candlesticks, never trade these in isolation. Number two, look for candlestick patterns occurring at areas of what significant, like supply zones and demand zones, and make sure you're looking for you're trading in the direction of a trend. It's extremely important. All right. So confluence is very cardinal in order to be a consistent, profitable trader. So make sure you're looking for those confluence. All right. So if you're a supply and demand trader, make sure that you have that imbalance right there. You're trading in the direction of the trend, and the market is pulling back that particular level right there. You have liquidity being taken out. That's confluence. When you have that, you are actually free to take that particular trade because it has given you everything that you need. All right, a trend is your friend. This is one of the overused concept in the market. However, it's extremely important, and its importance cannot be overemphasized. So make sure you're trading in the direction of the trend because it's extremely important. Don't be caught trying to pick tops and bottoms. Right, very important. Okay, then you may not find like I've shown you right now, you may not find these exact same candlestick patterns in the real chart. However, they might look different and they have different variations, right? So don't hesitate to take the trade just because it doesn't look exactly the same with the ones I've shown you. All right. So if you're in doubt, always stay away. If you're in doubt, stay away. So you guys, I hope I've given you something that is actually going to help you understand these things. These are extremely important things, especially these three candlestick patterns. For me, I have more sell setups than buy setups. That's the reason why I've not seen bullish examples right here. So three very important confirmation that I always look for in my trades, right? A bearish reversal pattern, right here, an evening star, and a shooting star, especially a shooting star. One of the best confirmation you're going to find in the market. All right. So, however, also remember to look at the bullish engulfing patterns as well. Morning star right here, and a hammer, which is called a bullish pin bar as well. So if you need this slide, You can DM me via Telegram. The links are in the description. I can actually share this with you. All right, you guys. Until next time, I hope you found this valuable. If you did, make sure you subscribe, like the video, and do all that. You guys, until next time, goodbye.